Thank you so much. So Atef, growing up in a shipping family, what made you want to button up your shirt, put on a tie, and become a fund manager?
Yeah. No, first of all, thank you for Marine Money for arranging all of this. I think pre-COVID, we all took such conferences for granted, and now it's great to see that we managed to get to see each other in person. So thanks for this. With regards, yeah, the tie was the easiest thing. I've always had a tie on, so putting a tie on and going into fund management wasn't the hardest thing. And I think the interpretation of that in specific is a bit different, because the founders of Pelagic Partners, namely Dr. Niels Hartman of the Hartman Group and myself, we both come from a shipping family. So getting our strengths together and seeing that, okay, let's go into fund management, not per se the fund management that is interpreted in the industry, but to actually opening up something regulated and invite investors to join us, not just to put their money with us to manage them, but also join us on co-investing into investments ourselves. This was just the right way to go around it. And yeah, as you said, coming from a shipping family, it was pretty straightforward for us to set this shop up and be able to put our expertise, our funds, along with investors and going the extra mile with them.
Thank you. So under the Pelagic umbrella, you have several funds. So let's start with the Pelagic Fund number 1. What's sort of the investment strategy and what type of investments have you made to date?
Yeah. So Pelagic Fund 1 is, as it says for its name, it was our first compartment under Pelagic Partners. It is the approach towards it was very opportunistic and diversified. So we run Pelagic Fund 1 very similar to what we would basically run our family businesses, mainly having a very diversified approach. The investments that we have done so far are in LPGs, product tankers, car carrier, bulk carriers. And the timing was quite right because, I mean, funnily, when we started Pelagic Partners, it was right before COVID. And we thought that, okay, is this the right time to actually do such a step, going into such a big uncertainty in the market? And it turned out to be great because the asset values were very, very low. And with the first bunch of equity that we have raised along with ourselves as founders, we managed to have a very good diversified approach with regards to Pelagic Fund 1. And the execution so far has been focused on very opportunistic, spot-driven investments in a way. And it has been going well so far. We are de-investing currently part of the portfolio. The idea is to give a little bit back to the investors and then reinvest within Pelagic Fund 1 to continue the growth within the first compartment.
So would you in that fund consider fixing out longer term any of your vessels, or is it being on be spot driven?
Yeah, on Fund 1, the investment strategy has been more focused on opportunistic. So our investors are happy with it. We are happy with it. When it comes to something more safe, we have, of course, other compartments. But so far, this has been going very well, and the risk appetite is there currently for if we're doing the right investments, of course.
So let's move on to the word safe. You have another fund called the Yield Fund. Obviously, there are plenty of yield funds around, both public and private. What sort of differentiates your fund from other funds out there today?
Yeah, exactly. I mean, the word yield fund came more from the idea of, with Pelagic Fund 1, it was very opportunistic. But then we thought of, okay, the investors and even ourselves, we would also like to see something that is more safely driven, yield driven, always getting something back to the pocket. So the investments under Yield Fund have been mainly into tankers, but the tankers are mainly working on longer charters, whether it's directly or through the pool. What would differentiate us from other yield kind of investment or funds out there is that we're quite flexible when it comes to the age of the vessel, the profile, the segment. I mean, if it's a segment that we are happy to put our money in, we would just basically do it. It's not a matter where we have thresholds that we need to meet. We're also happy to take residual value. So in case we teamed up with an owner and went on buying a vessel, having it on a longer term charter towards the owner, we are actually happy to have a residual value exposure on it, because then we can simply either trade it ourselves within Pelagic Partners or within the wider group behind us. So so far, Pelagic Yield Fund will, by May, we will cover a year. We have already paid out our first dividend, and we are continuing to focus to have at least constantly pay out dividends based on the business model within Yield Fund.
So of the ship owners in the room here today, which type of ship owner would you like to give you a call? Any particular segments, type of assets, other than what you mentioned, that you would like to sort of grow with in that fund?
Well, all the owners are welcome to have a call. I mean, it's always to meet people, and this is why I think such a conference is brilliant for such opportunities. But I believe we're all, currently we're not very segment oriented. I think whatever makes sense in a way, we would look into it. As the founders, we would like to be invested in segments that we understand and have cargo access to. So even though there might be brilliant opportunities, if this is a segment we don't fully understand, we would rather stay out of it. But having said that, within the wider group, there's nothing we haven't invested in over the years through Pelagic or through the wider group behind it. So I think we're welcome to discuss anything.
Okay, thank you. So we've seen in the news the past couple of months that you've started a new fund called Pelagic Wind Fund. What's sort of the rationale for that, and what type of investments are you looking to do there?
Yeah, so before Pelagic Wind, currently with the current projects that we have in the pipeline on Fund 1 and Yield Fund, we will be heading towards 200 million in asset under management on these two opportunistic / yield approach. Now coming to Pelagic Wind Fund, this is, I mean, the wind offshore and renewable part is a topic that we hold closely to ourselves. I mean, this is the way where we try to make our part when it comes to the energy transition and decarbonization, and investing in something we believe in, which is getting the world or making the world a better place, at least for the future. So after a lot of work the past year, and analyzing the market, we have set an order for 6 CSOVs. A total value of the order is 360 million. We will receive the first deliveries in 2025 onwards. And the goal is to increase the presence as well, so not just on the 6 vessels, but actually to grow that. Now, the rationale is that from a business perspective, it does make a lot of sense. We believe so. I'm not sure if some attendees here would see it differently. We have been quite a long time in the market, so it's not that we get carried away with nice stories about supply-demand. But we believe the demand curve on the wind offshore is very insulated from the political tensions and recessions and so on, because governments are dedicated to it. So the projects that will come online might get delayed a bit, but at the end of the day, in the next 5 to 6 to 7 years, all these new gigawatts and wind offshore parks will eventually come along, despite whatever is happening on the global economy. And we want to try to capture it. We are definitely not the first, but we are amongst the first. And with that, we're building a fully integrated operator, meaning that it's not just owning the assets and outsourcing everything. Very similar to what we do on other pelagic approaches. We try to do as much as possible in-house and benefit from our expertise. This is why we are also building Pelagic Wind Services, which will be the dedicated technical and commercial manager for the vessels under Pelagic Wind.
Interesting. Let's move on to another fund umbrella called the Global Maritime Fund, which is also owned and managed by Pelagic Partners. We understand that's sort of a Saudi-focused vehicle. Could you sort of enlighten us a bit what that's all about?
Yeah, so Global Maritime Fund has been established recently by Pelagic Partners, owned and managed. It's basically a venture that we have with our Saudi counterparties, IMI, International Maritime Industries. International Maritime Industries, for whoever doesn't know, is a very big maritime complex in Saudi Arabia. And we believe within the next 5 to 6 years, it will be the name will be talked about a lot, given the size of the maritime complex and one of the biggest shipyards in the world. So what does Global Maritime Fund has to do with it? It's basically Global Maritime Fund will be the facilitator or basically the party providing up to 100% financing for any owner that is entitled to build vessels in Saudi Arabia or at the IMI facilities. IMI by itself as a whole shareholding structure is mainly controlled by Aramco and backed up by the Saudi government. The money basically when it comes to debt and equity will also be Saudi focused. So it's just also an incentives basically. And one of the offtake agreements we currently have is with Saudi Aramco. The offtake agreement Global Maritime Fund have is for 23 vessels. Total capex will be 600 million. So Global Maritime Fund will raise this money through debt and equity, mainly in the Middle East, build the vessels, and then lease them out on a longer time charter or bareboat charter to Saudi Aramco. So this is one of the offtake agreements we have today, just to kick off Global Maritime Fund, and within that we have a huge pipeline of work under Global Maritime Fund, but we are also quite picky with who to do business with, because it also entitles actually high capex and building vessels. So the first offtake agreement is just a major milestone to show what Global Maritime Fund is going for with the Saudi Aramco order.
Thank you. So obviously, by the time that you built up quite a few different investment vehicles, what do you feel is the main difference of being a fund manager versus a traditional ship owner? Other than having to go to conferences.
Yeah, more conferences, definitely. To be honest, I think there is a misconception where they say the traditional owner might have it, it's sort of easier to handle perhaps, but I think mixing both. So I'm being very careful by saying that we have switched from traditional ship owners into fund managers, because that's not the case. It's a matter of mixing both together. And being fund manager, of course, you're regulated. We are perhaps just one step under public listed companies. So the difference between us and public listed companies is just we don't announce our results publicly or what we do publicly. Other than that, we're fully regulated. And I think this is the main difference, basically. We all know how traditional ship owning runs, also in the shipping family, but then putting this regulated part on top makes it a bit more challenging. You are obliged to look into aspects that usually you wouldn't look into as a traditional ship owner. But on from another angle, if you do this, more opportunities open up. Then you have opportunities like the Global Maritime Fund. You have opportunities to do the wind offshore, perhaps other aspects that traditional ship owners might struggle a little bit to get to that point. So if having both mixes together, as a fund manager purely, if you just focus as fund management and don't really put skin in the game and don't use and you don't have a bigger group around you, I think this business model wouldn't be so attractive. By being able to mix the family business along with the fund management, we are getting very good traction and feedback.
So you mentioned the public companies. So an obvious question is, and now let's try and drill down a bit here. Why should people put money in a fund where you're buying assets on NAV when quite a few of the listed shipping stocks are generally trading at a discount to NAV?
I think there's no right or wrong answer towards it. I think it's more like a personal perception of the investors, of course. So any person that is willing to invest their money, obviously they need to know what they need to make with their money. Having said that, we are of course a bit biased towards the private companies because we believe private companies like ours or private equity companies are insulated with this general, let's say, public shipping companies. If there's a general sentiment around the world, maybe you have, there's just a sell-off on Wall Street on tech companies, and then you see a great shipping company who is actually fixing and doing great results is going down as well, because there's just this sentiment of going up and down in volatility. So while as on the private shipping fund, you put your money, you know your NAV at entry. The only thing that will take your NAV up and down is basically the asset value on normal circumstances and the profit and loss of the company. You wouldn't be too worried about what's happening around in the world. So sure. That's an important factor. Otherwise is control. So when we have investors coming in, putting a large stake into Pelagic Partners, they of course also have a say of what's happening. While as I think if you go and put 1, 2, 3 million into an ex-public company in shipping, you won't have much to say. So I think this is the preference. If someone though has a risk appetite and likes roller coaster effect, then of course they can find their way through the public companies.
No, sure. And will you be able to benefit from that roller coaster if the listed stocks are traded really down? Yeah. Are you able within your investment mandate to actually do public to private or take smaller positions in listed companies?
Well, under our license, we are allowed to do this. So it's from the regulatory point of view, we're allowed to do that. However, our position would more focus. If we would do that, it should complement what we are doing on the real assets kind of thing. So yes, we are in a position to perhaps invest in public shipping companies, but that should be more, for example, on companies that we believe in their assets, whether it's on the offshore wind. Then perhaps we would look into that aspect and make sure that it's complemented in a way.
Thank you, Atef. So I think we need to round it off, and I was given the schedule of the Marine Money conferences for this year. So if you were to place your bet, at what Marine Money conference will you come back on stage and say that you've passed 1 billion in AUM?
1 billion in AUM, with the current projects that we have in the pipeline, I hope before end of 2023. So
Marine Money in November.
I haven't seen the schedule, but perhaps by then we should be at least close to that.
Good. Look forward to that. Good luck, Atef.
Thank you.
Thank you so much.